Jai Hind everyone. Welcome to my YouTube channel, which is Explore Yourselves, Banking and General Knowledge, etc. Your next promotion is not just a step up in your career, it's a step closer to your dreams, your respect, and your financial growth. The bank promotion exams 2025 to 2026 are your golden opportunity, and I'm here to make sure you grab it with both hands. In this journey, we'll learn smart strategies, master important topics, and tackle questions just like the exam demands. Remember, success does not come to those who wait, it comes to those who prepare. So let's start today, prepare smartly, and make your promotion in 2025 to 2026 a reality. Welcome to part 34 of my Path to the Corner Office 2025 to 2026 series, where we break down real bank promotion exam questions and give you clear practical sample answers to help you climb the career ladder faster. The subject: Bank of India's NPA Management, Restructuring of Agriculture Advances. A loan for short duration crops is treated as NPA if overdue for option A 90 days, option B 1 crop season, option C 2 crop seasons, option D 3 crop seasons. The answer is option C 2 crop seasons. A loan for long duration crops is treated as NPA if overdue for option A 1 crop season, option B 2 crop seasons, option C 90 days, option D 180 days. The answer is option A 1 crop season. The crop season for each crop is determined by option A RBI, option B NABARD, option C state government, option D SLBC state level bankers committee. The answer is option D SLBC state level bankers committee. For non-farm agricultural loans, NPA identification is based on option A 60 days delinquency, option B 90 days delinquency, option C 1 crop season, option D SLBC decision. The answer is option B 90 days delinquency. Agricultural term loans availed for crop cultivation follow NPA norms based on option A type and duration of crops raised, option B farm size of borrower, option C interest rate on loan, option D security offered. The answer is option A type and duration of crops raised. The next subject is Bank of India's NPA management prudential guidelines for restructuring under bank's policy. Under prudential guidelines, restructuring of advances is permitted primarily to option A reduce interest burden only, option B help borrowers in financial difficulty and preserve asset quality, option C convert term loan into working capital, option D waive off penal charges. The answer is option B help borrowers in financial difficulty and preserve asset quality. Asset classification after restructuring is done on option A facility wise basis, option B borrower wise basis, option C security wise basis, option D branch wise basis. The answer is option B borrower wise basis. If restructured advance fails to perform as per revised terms, it should be option A upgraded automatically, option B classified as NPA, option C kept in standard category for 2 years, option D written off directly. The answer is option B classified as NPA. Restructuring of advances should be supported by option A oral agreement with borrower, option B proper financial appraisal and documentation, option C board resolution only, option D waiver of collateral security. The answer is option B, proper financial appraisal and documentation. Which of the following is not normally eligible for restructuring under prudential norms? Option A, standard assets. Option B, substandard assets. Option C, doubtful assets. Option D, fraudulent or willful default accounts. The answer is option D, fraudulent or willful default accounts. The next subject is Bank of India's NPA management prudential norms for project under implementation. A loan for infrastructure projects will be classified as NPA if commercial operations do not commence within option A 6 months of DCCO, option B 1 year of DCCO, option C 2 years of DCCO, option D 3 years of DCCO. The answer is option C 2 years of DCCO. For non-infrastructure projects, the maximum permitted extension for commencement of commercial operations is option A 6 months, option B 9 months, option C 12 months, option D 24 months. The answer is option C 12 months. If the DCCO is extended up to 4 years for infrastructure projects due to reasons beyond promoters' control, the provisioning required is option A 0.25%, option B 0.40%, option C 2%, option D 5%. The answer is option D 5%. Provisioning requirement for standard assets where DCCO is within the original 2 years infra or and 1 year non-infra. Option A 0.25%, option B 0.40%, option C 1%, option D 5%. The answer is option B 0.40%. For delayed project loans, higher provisioning continues until option A revised DCCO or 2 years from restructuring, whichever is later. Option B 1 year after restructuring. Option C RBI's next inspection. Option D project reaches 50% completion. The answer is option A revised DCCO or 2 years from restructuring, whichever is later. The next subject is Bank of India's NPA management prudential norms limit credit exposure. As per RBI prudential norms, exposure to a single borrower is normally capped at option A 10% of capital funds, option B 15% of capital funds, option C 20% of capital funds, option D 25% of capital funds. The answer is option B 15% of capital funds. With board approval, exposure to a single borrower engaged in infrastructure projects may be extended up to option A 15% of capital funds, option B 20% of capital funds, option C 25% of capital funds, option D 30% of capital funds. The answer is option C 25% of capital funds. Maximum exposure to a group of connected counterparties is capped at option A 20% of capital funds, option B 25% of capital funds, option C 30% of capital funds, option D 40% of capital funds. The answer is option B 25% of capital funds. For infrastructure projects, group exposure can be extended up to option A 30% of capital funds, option B 35% of capital funds, option C 40% of capital funds, option D 50% of capital funds. The answer is option C 40% of capital funds. Prudential exposure norms are designed to option A increase bank profits, option B diversify risk and prevent concentration, option C waive large loan defaults, option D reduce provisioning. The answer is option B, diversify risk and prevent concentration. The next subject is Bank of India's NPA management initiation of legal action. Legal action is generally initiated in NPA accounts when option A, borrower refuses restructuring, option B, recovery efforts fail or borrower is uncooperative, option C, account is still standard, option D, security value is more than loan outstanding. The answer is option B, recovery efforts fail or borrower is uncooperative. Before filing legal action, the bank must ensure option A, adequacy of documentation and limitation period not expired, option B, availability of third party guarantee, option C, borrower's consent, option D, collateral is already sold. The answer is option A, adequacy of documentation and limitation period not expired. Which of the following is not a mode of legal action? Option A, civil suits, option B, DRT filing, option C, SARFAESI proceedings, option D, loan restructuring. The answer is option D, loan restructuring. In legal action, banks usually file cases to recover option A, penal charges only, option B, principal and interest due, option C, only interest, option D, government dues. The answer is option B, principal and interest due. Once legal action is initiated, the bank must option A, stop all other recovery processes, option B, continue follow up and recovery efforts simultaneously, option C, waive security enforcement, option D, write off the account. The answer is option B, continue follow up and recovery efforts simultaneously. The next subject is Bank of India's NPA management civil suits. Civil suits are generally filed by banks for option A, recovery of dues from defaulting borrowers, option B, criminal prosecution of willful defaulters, option C, settlement negotiations, option D, avoiding provisioning norms. The answer is option A, recovery of dues from defaulting borrowers. For filing a civil suit, the bank must ensure option A, proper documents and cause of action within limitation period, option B, criminal charges are filed first, option C, DRT approval is obtained, option D, RBI approval is obtained. The answer is option A, proper documents and cause of action within limitation period. The monetary jurisdiction of civil suits is decided by option A, RBI guidelines, option B, value of claim and jurisdiction of civil court, option C, bank's internal committee, option D, Ministry of Finance. The answer is option B, value of claim and jurisdiction of civil court. Civil suits can be withdrawn by the bank when option A, borrower requests, option B, OTS and compromise settlement is approved, option C, account becomes standard, option D, RBI directs. The answer is option B, OTS and compromise settlement is approved. Filing of civil suits is generally considered option A last resort after other recovery measures fail, option B, the first step in recovery, option C, mandatory for all NPAs, option D, an alternative to SARFAESI. The answer is option A last resort after other recovery measures fail. The next subject is Bank of India's NPA management, debt recovery tribunals, and appellate tribunals. Debt recovery tribunals are established under which Act? Option A, SARFAESI Act 2002. Option B, Recovery Debts Due to Banks and Financial Institutions Act 1993. Option C, Indian Contract Act 1872. Option D, RBI Act 1934. The answer is option B, Recovery of Debts Due to Banks and Financial Institutions Act 1993. The minimum claim amount for filing in a DRT is generally option A rupees 5 lakhs, option B rupees 10 lakhs, option D rupees 20 lakhs, option D rupees 50 lakhs. The answer is option C rupees 20 lakhs. Appeals against DRT orders are filed before option A Civil Court, option B Supreme Court, option C Debt Recovery Appellate Tribunal, option D RBI. The answer is option C Debt Recovery Appellate Tribunal. For filing appeal before DRAT, the borrower is required to deposit option A 10% of dues, option B 25% of dues, option C 50% of dues, option D 75% of dues. The answer is option C 50% of dues. DRTs were mainly set up to option A reduce NPAs by expeditious adjudication and recovery of debts, option B replace civil courts completely, option C provide restructuring support to borrowers, option D waive penal charges. The answer is option A reduce NPAs by expeditious adjudication and recovery of debts. Thank you very much for your patience. Please like and share this video and subscribe to my YouTube channel.